What's up everybody, Nate here, and we just got the most recent inflation numbers from the Bureau of Labor Statistics, and finally, it looks like inflation is coming down in our economy. Inflation for October 2022 came in at around 7.7%, much lower than Dow estimates had predicted. So today, I want to talk about where inflation is right now, what all of this is going to mean, and of course, where inflation could be headed next. All right, so inflation at around 7.7% means that something that cost you $100 just a year ago now costs you around $107.70. Core inflation, which is everything minus food and energy, came in at around 6.3%, so that also had a slight decrease from the month of September. Now, the biggest things that are keeping inflation high in the United States have been the things that have kept inflation high for a while. We're talking food, we're talking gasoline, and we're talking shelter costs. So these things are keeping inflation high in the United States, and it means that Americans are now spending a whole lot more of their paycheck on everything else. But the trend for inflation in the United States has actually been pretty good as of recently. Over the past few months, we've actually seen inflation slightly start to dip every single month. Year over year, inflation is still pretty high, but if it continues to come down, then everything the Federal Reserve and everything that businesses and our legislatures are doing is bringing inflation down. Yeah, so far it's been really slow. And part of the reason why we're seeing inflation improve right now is because a lot of things that are outside the United States government's control are also starting to improve, like lockdowns in China and of course the war between Russia and Ukraine. Obviously there is still a war overseas, but that hasn't really escalated any further than an energy crisis for Europe and the United States not getting any Russian oil. There really hasn't been many other financial or economic consequences from that conflict, and there really hasn't been anything else major that has caused energy prices or food prices or anything else to massively go up. So with all that being said, inflation has started to come down pretty rapidly. One of the other major reasons why we had such really high inflation over the last couple of years is because of supply chain issues, and because we had an energy crisis, and because a lot of Americans were out of work. That meant that there was a backup of inventory. So now people couldn't get the things that they needed to at the store, and businesses were really struggling to keep up with what demand was because of all of the money printing and stimulus checks that were going out as well. So that meant a backlog, and when things finally did come in stock, well, Americans bought a lot of that up, and it took a long time for everything to kind of catch up from the global catastrophe of the pandemic. But the other thing you got to remember too is energy was a really hot commodity, and because oil prices in general went basically into the negatives in 2020, then in 2021 they started to go up, but as they went up, that meant that all of your supply chains needed more oil too, and they needed more oil because they were now going to be improving their supply chains because demand was so high for all products and services. So they were using a lot more of their supply, and that meant that oil and energy all throughout the world suddenly started to skyrocket, and that has meant that inflation, not just in the US has gone up, but in Canada and the UK and China as well. So it's a global problem, and the thing that you need to remember here is inflation just means that Americans are going to be spending a lot more of their paycheck, and businesses are going to be spending a lot more of their profits and revenue on certain things. It's part of the reason why we've seen some earnings reports that have been really bad recently on the stock market. Businesses have higher costs related to the supply chain and employees because inflation is so high. Remember, you have to pay a lot more just to produce things in 2022, but you also have to pay more to your employees because inflation is so high. And if you're not able to recoup some of those costs with your sales, then now you've got a pretty serious problem, and you just have to keep paying people more so that way they can go out and afford to buy more. So this is kind of a rotating problem, and it means inflation gets out of control if prices are out of control in our economy. Now the big question is, how exactly do we bring down inflation, and what exactly can we do about it? So you have to look at inflation from two sides. There's the demand side of inflation, and then there's the supply side. And depending on which way you decide to tackle, that's going to have a really big impact on the future of your economy. So right now we have the Federal Reserve. Now the Federal Reserve sets most of the monetary policy in the United States, and that means that they have an influence over debt and how people spend money in our country. They have influence over the demand side. The Federal Reserve has a monetary tool of interest rates, and if they raise their interest rates, then that brings down demand in our economy because it's really hard for people to afford to get a mortgage, and it's a lot more expensive for investors and businesses to take on debt. Not only that, but all of the debt that they have becomes a lot more expensive. So with rising costs, they're not able to really recoup them with sales, so they've got to just cut. And that means that their spending goes down and they raise their prices in order to make some of that money back. Over the last couple of years, the Federal Reserve has controlled our economy with lowering interest rates. So they kept them at 0% for a very long time because they wanted Americans to go out and spend money. They wanted to make it really easy for businesses to grow because they knew that that would stimulate our economy very, very quickly, and it did. In 2021, our economy grew faster than it pretty much ever has. We saw GDP explosion last year, and our stock market also exploded. The housing market in terms of prices also went way up. So the Federal Reserve kind of succeeded in that way. But when you have a lot of overspending and a lot of excess in your economy, then that means that prices go up because people are buying so much and so much money is circulating throughout your economy all at once. All of your markets are going up and prices are rising, and that can't happen forever because eventually your money is going to be completely useless. If everybody has something and they have a lot of it, then that is not really a rare thing to have and nobody really cares about it. So the Federal Reserve has to be careful that there's not too much money circulating around. And in order to take care of that, they raise their interest rates. All throughout 2022, they have been raising their interest rates in order to battle inflation. They want to bring inflation down because our money is losing a ton of value and businesses are taking on more costs, and Americans simply can't keep up in their wages with inflation. They're not making enough money. So that is the demand side, and it's something the Federal Reserve is working on, and the kind of thing that is really making investors happy right now and a lot of Americans is that the Federal Reserve might start to slow down its interest rate hikes because inflation is coming down so rapidly. They have raised their interest rates 4 consecutive times at 75 basis points, which means the federal funds rate is now around 4% in the United States. That's extremely high considering it was at 0% just a few months ago. And like I said, with it going up so quickly and aggressively, that means businesses are going to have a really hard time taking on debt, and investors aren't going to want to invest in companies because it's really risky. In 2021, it was super easy for businesses to take on debt and invest in companies because their interest rate was 0. So even if they got a 1% return on their money, that was still going to work out for them because their interest rate and the debt that they took on was 0%. They made more than what the interest rate actually was. But now it's getting a little bit higher. It's now at 4%. So now they need to make a 5% return, and that's going to be a whole lot more difficult in this economy. So many investors just are not doing it. They're holding on to their cash, and again, that means inflation comes down. It means your asset prices come way down because investors are not investing as much. It also means that your businesses are not going to be able to grow as quickly, so they don't have as much money to give to their employees or to improve our supply chain. So all of that starts to shrink, and that's exactly what the Federal Reserve wants. They want everything to kind of shrink. They want to restrict our economy right now so that way inflation can get down to their target level of 2%. Right now we're at 7.7%, so they've got a long way to go. And then there is the supply side. So the theory is you can work on demand, you can bring down demand, you can spark demand, or you can improve supply, or you can lower supply. In theory, if you have really high demand, then what you need to kind of fix that in order to keep prices not out of control is to just increase demand. But that has been really difficult because of all of our supply chain problems, because of things like the Great Resignations affecting productivity, and we've had a lot of resources related to microchips and other things that have kind of kept production in a lot of ways low in the United States and across the world. Those things are starting to improve, which means inflation can come down because we simply have too many things. Some businesses have way too many things, like Walmart and Target actually over-ordered on their inventory because they were trying to anticipate what demand was going to be. They ended up ordering way too much inventory and have now started to take a big loss on that because people just aren't buying it. So they tried to improve inventory from the supply side, but that hurt their business overall. Congress has also passed the Inflation Reduction Act, which is supposed to kind of make all of these inefficiencies in our economy efficient once again. So that way in the future, we have better energy infrastructure and we have a lot of companies and supply that can be produced a whole lot better. Now, it takes money to make money from Congress, so they did end up spending around $300 to $500 billion on the bill, which did hurt inflation in the short term, but but the goal is to kind of bring down inflation in the long term. Again, I don't know if it's going to do that. We don't know exactly how these resources are going to be allocated in the future, but that was the goal. So you can look at things from the supply side, but in reality, you kind of have to do both. It's going to come down to businesses and Congress, and of course the Federal Reserve, all working together to kind of bring inflation down. Because the big problem that we're running into in the United States is a recession. The big fear is that the only way that the US government and the Federal Reserve and our entire economy is addressing inflation is through interest rates. The Federal Reserve can limit demand by raising their interest rates, and if they do that too much, that could cause a recession. Because think about it, interest rates control what investors are going to do. They control what people can do to get a mortgage or an auto loan or spend on a credit card. If it's impossible to get a loan or a mortgage, then people aren't going to do it, and the higher those rates go, the fewer people are going to do it, which means there's going to be a lot less sales, and you're going to see some pretty big layoffs. In the tech industry, we have seen huge layoffs. So the Federal Reserve has to be really careful, because they can't just raise interest rates way too high, because that could cause a recession. That could cause demand to go through the floor way too quickly, but they also can't lower interest rates, because that means inflation is still just going to be a problem. So they have to kind of look at the data. They have to kind of look at what consumers are buying and how consumers are feeling about inflation in the future. If people feel like the economy is doing great and inflation is going down, then they're going to go out and spend their money with confidence. If they're really scared and they don't want to spend their money because everything costs so much, then they're not going to spend their money. So the Federal Reserve also sets those expectations for consumers in the future. Now, what exactly is coming next for inflation in the future? Well, I'm going to be honest with you. I have no idea. I don't have a crystal ball in front of me, so I can't tell you for sure if inflation is going to continue to rapidly go down. And the reason being is because you got to remember what causes inflation in the first place. Inflation comes from a lot of things that are outside the United States' control, like supply chains and other economies slowing down and energy crises because of the war between Russia and Ukraine. It's also caused by an overabundance. If you have too much and people are spending way too much, and that's going to be a problem too. So it really just depends on what exactly the numbers look like and if all of these factors are controlled, because if something kind of goes haywire in another economy or across the world, then that could cause inflation to go up here at home. And if the Federal Reserve decides that it wants to flip the money printer back on because of some type of catastrophe, or if inflation gets to say 5% and they feel like that's good enough, that will mean inflation stays back up. And we don't really know what the Federal Reserve is going to do, because they have to be careful with our economy. If the economy is in a really terrible, bad recession and unemployment is going way up, then yes, inflation might come down, but not enough and not fast enough. So the Federal Reserve might hit the brakes and go into reversal mode because they have to. That would stimulate the economy and help everybody out in the short term, but it is going to cause inflation to go up, and we don't know if that situation might be coming either. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.